All right, guys and gals, back to work. Boy, fantastic session comes to an end. Hope you guys made some money out there today. What happened this afternoon? The markets got the old rug pulled out from underneath them this afternoon. All kidding aside, though, anytime we see a big move like this, anytime we see a rug pull like this in the afternoon, there are plenty of ways to make money the following day. In fact, I have 3 specific trades I always look for after a rug pull scenario like this. Any one of these trades tomorrow could make us a ton of money. So charts are all prepped up. The game plan is ready. Enough of the intro. Let's go find some more winning trades on Thursday morning. Charts look fantastic here tonight. NASDAQ triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have 2 very important clues on the charts in front of me that are telling us where the winning trades are waiting for us here tomorrow. One of those big clues is right here on these 60-minute charts in front of us. We have a bull move up into a trading range on the S&P, bull move up into a trading range on the NASDAQ. Now, ranges are very important because ranges act like magnets. We're now at big time support levels underneath these trading ranges. This seems like a great place to be a buyer going back up into that trading range. But there's something wrong. Not so fast. It may not be that easy to get that squeeze going back up again. I have one even more important clue on the faster time frames. Some tick charts that will go perfectly with these hourly charts and help us time the best entries and wrap it all together for a winning strategy for tomorrow. And before we jump in, though, and talk about that one more important clue on the tick charts here, let's check schedule for tomorrow because we've had quite a bit going on so far this week. I have 2 things on my mind for tomorrow. First thing is, of course, we got a big block of news, that PMI number at 9:45. And, of course, anytime we see Red Star News at 10 o'clock Eastern time, we definitely want to pay attention. I'm not going to worry about the jobless claims tomorrow or the Fed speakers. My eyes are on that PMI number tomorrow at 9:45. The second thing on my mind for tomorrow is we don't have any more earnings until next week. We heard from the Tesla earnings this afternoon. Things look pretty good over at Tesla right now. We have no more major earnings the rest of the week, so we'll kick that can down the road to next week. Next week, though, my goodness, we have Amazon, we have Apple, we have Microsoft, we have Meta. We're going to kick this into high gear next week for peak week earnings. So you don't want to miss next week's video newsletter. But keep your eyes on that PMI number tomorrow morning and that new home sales number around 10 o'clock Eastern time. Let's get back to our charts, though, because I mentioned earlier, anytime we see the big rug pull that we saw here this afternoon, there are plenty of ways to make money. I mentioned earlier we have a bull move up into a trading range, and we're sitting at some great support. I would love to buy this thing going back up into that range, but there's something that may not make that very easy. Let's go to some tick charts here right now. Now, tick charts are fantastic for entry timing. I like to use those hourly charts for an overall direction, big picture, but this is a 7,000 tick chart, all the time frames you need in the upper left-hand corner, by the way. And this, my friends, is the 21 EMA. As you can see, it's the only indicator I use to find winning trades. One really, really big clue here on these tick charts is the size of that move going lower. Now, anytime we see a big move in one trading session, there's a very simple pattern we look for. It's a 2-legged pullback and a retest of that low. Anytime I see a big move in one direction, it's a 2-legged pullback and a retest of that low. Now, this move lower was mostly sparked by fear coming out of Apple, talking about supply chain and demand problems. Most of this was just kind of a fear move going lower. So would anybody be surprised if this thing V-bottoms and just whoops right back up into that range? We're overall bullish on these 60-minute time frames, so we have to make sure we account for that as well. So whenever I see a big move and a range above me now, there are 4 types of trades I'm looking for the following day. The first one, my favorite one for tomorrow, is definitely going to be that double bottom bear trap off that low. I would love to make that run back down to those lows. And remember, guys, I'm not going to pick a bottom on this, right? We don't pick bottoms in any market for that matter. We don't know how far they're going to go. What I do know, though, is this is a horrible spot to be selling. So if I can trap in some bears down here and use what I call a failure pattern, it's bears once, bears twice. Why twice? Because once I have them in twice, now I've got their stops and I can buy right into those stops for a run back up to retest that high, and of course the runner back up into that trading range. Now remember, anytime we see a double bottom retest like that, we can add to that move going higher with a very simple pattern called basically a bear trap pattern, right? It's a bear trap, which means we're looking for separation off the moving average, higher high in price, and I want to get right below that prior swing. Nice strong green candle closing above that 21 EMA, just like I teach in our free video course. So my favorite trade for tomorrow, the first of 4 trades I'm watching with this rug pull scenario with the range above me, is back down to retest the low. I'm not going to pick the bottom. I'm going to use that 2-try failure we love so much in our trade room, trapping those rookie bears, chasing it lower, squeeze those stops, and then remember, don't forget, if you want to make more money, add to your winners, and to do that, it's always going to be that simple trap pattern I teach inside the free video course. That is the first one out of 4. Now, we may not make it all the way back to that low. I would love to go back to that low for a nice bear trap off that double bottom. I mentioned earlier on the chart here, there's a channel coming up off of that high, off of that low. We may only get a relatively shallow pullback and then running back up here. The problem with this though is we know that the sellers are going to try to take out that low. All of that momentum says these bears, they want to take out that low before they let this thing run back higher. So if all I get is a shallow pullback right now below one of these swings, for example, I got to be careful and respect momentum for the bears. This is where what I call a 2-try bear trap will come in handy. What does that mean? Well, it basically means let the bears try once, let them try twice. I don't want to buy as we're going higher, like a typical 2-try failure would be. I want to make sure I'm buying as low as I can in this scenario, because again, as it goes higher, we have to assume that bears are trying to run this thing back down to retest the low. It's basically a 2-try for the bears. I want to get right below that low, get it as low as I possibly can, and hopefully squeeze those bears out and run back up into that trading range. Run it lower, get the bears trying once, higher high, bears trying twice. It's so important we try twice, because then stops are sitting there to get let up, get below that low, and that nice strong, in this case, green candle closing above that 21 EMA. That is the signal we need for that 2-try bear trap, a shallow pullback without getting that double bottom. That's 2 out of my 4 favorite trades for tomorrow. Trade number 3. If this thing starts to rip and run higher, if we V-bottom off of this low, my problem is I don't want to chase after this. I don't want to buy high. Whenever I find myself in a scenario where I don't want to buy high, it's always going to be a 2-legged pullback. Now, 2-legged pullback, think about a measured move that goes a bit too far. A measured move that goes a bit too far. What I'll do in these situations is I'll look left. I'll find one of these prior swing highs, connect a trend line off those highs, bring it down around those lows, find that hidden channel, as we call it in our trade room. And as always, I'm not going to pick a bottom on this. It may roll all the way over back to that low and then bounce up, right? So don't be a rookie and try picking bottoms on that. What I'll do is once I have that 2-legged pullback, a bit more than a measured move, then we go out and use that same 1, 2. I love to trap in bears here, use their stops to squeeze those stops running higher, failure, and remember, don't forget that separation off the moving average, higher high in price, and you want that trap right below that low, right? So again, if we start V-bottoming here and squeezing, running higher, now the problem is not so much bear momentum. The problem is now I don't want to buy high. Whenever I find myself in a situation where I'm buying high, it's 2-legged pullback, a bit more than a measured move. Then trap those bears in a 2-try failure pattern into a classic bear trap combination. adding to your winners, jumping back in. And again, this range overhead, that is the magnet. Now, I told you earlier, I have 4 trades I'm looking for tomorrow. Before we talk about that final 4th trade, though, let's slow down for a second, because I know most of you guys and gals watching right now, you know these patterns, you're making money with these already, but if you're watching for the first time right now, this might be a brand new language I'm speaking. What are bear traps and failures and two-legged pullbacks? Don't you worry. I teach this entire strategy. I have hundreds of examples of failures, traps, and two-legged pullbacks. I cover so much more of this and a ton of examples in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up and take that free trading course right there, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are waiting for us each day. More importantly though, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video trading course. Everyone loves all the trade examples in that short video series. It is perfect for anyone who's serious about making money in these great markets. And don't forget too, guys, I'm going to put all the important links you'll need to learn more about this stuff in the description of the YouTube video. I'll put the free course links down there. Don't forget too, we trade together every day, 8 o'clock Eastern time in our trade room. I'll put trade room membership links down there for you. And keep in mind too, I post a lot of updates on Twitter, or X as they call it these days, charts, videos, mindset stuff. If you're on Twitter X, give me a follow. Again, all the important links you'll need and details you need to learn more and hopefully help you learn a lot more are all linked up in the description of the YouTube video. So now, I promised you 4 trades here, 4 favorite trades for tomorrow. Covered 3 out of 4 so far. The final one is how do we sell this thing? How do we sell back down to retest the low, right? We'd love to short this thing back to retest the low. The problem is that we're still overall bullish on the hourly chart, and that range overhead is a significant magnet. So the way you sell it is always going to be a bull trap. Now, people use the term bull trap all the time, right? But a true technical bull trap is always going in, letting these buyers try once, go lower, try twice, that lower low in price, above that high, strong red candle, right? Strong red candle, below the moving average, and that's my short going back down to retest the low. I would love to get a bull trap short and then combine that now with that bear trap off that low. Remember, in this case, it's a 2-try failure off that low into that bear trap combination going back higher again. Now, these bull traps, they do come in lots of shapes and sizes. One thing you want to be aware of is when we try to go back to that low, I like to look at the distance of this range and split this range right in half. Think about where that 50% of that range is. So for example, right, if we wind up going lower and something like this, right, like that, this is not nearly as desirable, right? Again, think about the size of that move here. Where is that 50% line? I want to be entering above that 50% line because then my risk reward is balanced. So just be aware of kind of the risk reward game we play on this as it pulls back. We oftentimes get stuff like this where it'll grind lower, kind of grind down like that, find a channel off that low, off that high. And again, think about that risk reward equation, right? Mark that box. Think about where that halfway point is, right? I want to be above that halfway point to make sure the risk reward makes sense, and bull traps above that high. So something I'll be watching for tomorrow. If we do get that bull trap short, I just don't want to be doing it below the halfway point. Mark that high, mark that low. I want to be above that halfway point. That way my risk reward ratio makes sense on that. Hopefully that makes sense on that. So those are 4 my favorite trades here for tomorrow. Now, I have a couple variations of this I'm going to talk about here on the NASDAQ here. Let's cover NASDAQ. NASDAQ is, believe it or not, in even a better spot right now than the S&P. Before we talk NASDAQ though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this video link with other trading buddies. Guys, that small action takes barely any time for you, but makes a huge impact on my channel because YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days, and I appreciate you spending a few valuable minutes every evening here on these videos. So thank you so much for the likes, subscribes, for all your support. Now, let's get back to talking NASDAQ here. NASDAQ is a beautiful chart right now. Bull market up into that range. We're right down around all this key support. I love how that triangle, it's just gorgeous, right? I love that triangle right there. I mean, you couldn't paint a better picture for now a great spot to be buying back up into that range overhead. The challenge, of course, though, is all of that momentum, right? Look at all that momentum running lower here. Anytime we see a big move like that, all of that momentum is the bears are not going to give up without a fight. They're going to want this to run down and take out that low before they stop pestering these buyers and letting the market squeeze back up into that trading range here. So very much the same game plan we had here on the S&P, right? I want to be back to that low, trap those bears in, squeeze those bear stops with a failure pattern, add on to your winner or jump back in on a bear trap combination. I really have to be very careful. If all we get is a shallow pullback, the bears are probably not going to go away very easily. So because of that, a shallow pullback will always be, in this scenario, it'll always have to be that two-try trap. Higher high in price, a trap below that low. And I realize this might be a bit complicated to learn at first, but trust me, once you get into that free video course I mentioned earlier, this will all make a lot more sense. Everyone loves that free video series. That's a two-try failure with a trap entry to make sure that by the time I get that one-to-one target going higher, it may want to roll back over and take out that low. That's where you want to buy as low as you can on a shallow pullback. Got to be a shallow pullback with a trap. And again, if we V-bottom off that low, because in all reality, most of this move this afternoon was all based on that headline we saw from Apple this afternoon, talking about demand and supply chain and blah, 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 right? So this may easily just evaporate overnight. If this thing rips or starts grinding going higher, now the problem isn't so much momentum. Now the problem is location. Remember, there's always two things you want to think about. How is momentum and how is location? There's no free lunch in trading. There's always one of these wrong. There's always one problem. Either momentum's the problem. Right now, momentum is the problem, right? Momentum is the problem for the buyers right now. Respect the momentum, expect it to want to short, and back to retest the low. If we go higher, momentum isn't the problem anymore. Now it's location. So I always tell my students, before you take any trade, ask yourself, what's the problem? Is it momentum? Is it momentum? Or is it location? There's always that. If there is no problem, you're not seeing it. All right. There's no free lunch in trading. Momentum or location. Which one is the problem? We can work around them, right? Momentum says, right? Momentum says, look for bear traps, right? Momentum says, trade bear traps. Trap in the bears. Use their stops to squeeze, right? If momentum is the problem, use bear traps to squeeze those stops. If location is the problem, now buy nice and low. How do we buy nice and low? We buy nice and low with a two-legged pullback. 1, 2. Again, think about a measured move that goes a bit too far. Again, in these situations, we'll go out, mark a trend off the highs, mark off that low. That will give me a good spot to be a buyer. We're not going to blindly buy down there. We know better than that, right? We'll go in and we'll trap the bears in once, twice. I like to use failure patterns because stops, in my experience, the easiest way to make consistent money is to trap traders, in this case, below the moving average and squeeze their stops, right? If you get stopped out of a short trade right here, right, you buy your way out, squeeze those stops running higher here. So momentum or location. One variation I want to talk about though is I want to go back to retest that low and trap those bears in again, right? And squeeze back up again. We may not get that. A lot of times in an overall bull market like this, we'll literally go back to that low, We'll go back to that low and just bam, right? It's just squeeze off of that low, and there won't be any entry, right? That's always one of the hard parts about these overall bull markets and the retest of that low. If we get a real strong kind of whoop off that low, it'll probably end up being a V bottom. Now, V bottoms, you need to learn this setup. If it V bottoms off that low, what's going to happen is that little voice in your head is going to start screaming at you, get in, get in. If you're anything like I am, when you get these V bottoms, it's going to be torture, right? Because you want to get in, you know what's going on right now, but you don't want to chase after it, because what's happening is when it V bottoms like this, these are bears getting out. Eventually, buyers will want to come back in. When the buyers come back in, they're going to want to buy nice and low. To buy nice and low, we mark turn off the highs, bring it down off that low. That gives me a channel. Now, look left, find some prior swings. What I want to combine a prior swing off the low of that channel. We mentioned a bunch of these in last night's video, right? You want to get above prior swings. When it grinds down like that, find those swings. Just as we saw today on both the S&P and the NASDAQ, in this case, find those prior swing highs, right, and grab that. Again, my favorite trade is getting right below one of those prior swings right there. Bear trap, failure pattern, pullback combination, any of the entry patterns you guys are learning inside the free video course. Now, this V bottom, of course, also applies to the S&P as well, so you can easily kind of interchange these here for tomorrow, right, guys? So plenty of ways to make profit in this tomorrow. Remember, keep asking yourself, momentum or location, which one is my problem? And that will tell you which setup to look for. And as always, tomorrow morning, we'll do this together tomorrow morning in our trade room. Make it nice and easy to follow along tomorrow morning, the trade room. So that's our game plan for tomorrow. Don't forget, tomorrow morning, 8 o'clock Eastern time. I can't think of any easier way start making money in these markets than to learn and trade along every day in our trade room. I'm going to put all the important links you guys need in the description of the YouTube video. Start first with the free video course. Everyone loves the free video series, lots of trade examples. You'll learn all the roadmap we teach here in these videos on YouTube. But start first in the free video course. Any trouble getting access to the video classes, you can always leave a comment or use the chat box there. Call the office if you guys have any trouble getting access to the free video courses. But hope you learned a bunch this afternoon. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon trading with us in the morning trade room at 8 o'clock Eastern time. All the members here at SOT. Right, guys? Have a fantastic evening out there. Be well. Be nice to each other out there, will ya? And you better be here next time. Adios, amigos. Bye for now.